Well, good morning, everyone. Welcome to our Thursday morning trading room. Here a second, we'll get the screen share going on. Okay. Oops, wrong button. Well, yesterday the market really not doing much intraday, spent a lot of time going sideways. It looks more impressive here on the daily chart. But like I said, it wasn't doing a whole heck of a lot intraday. Made a very broad sideways trading range. Notice how the volume is tapering. Now, it's probably, well, I don't know. It's a little bit too early for rollover expectations. I can't see people thinking about the December contract already. So I would have to assume volumes going down, prices going up. That does not look all that good for the buyers. This is how you use volume. Volume is supposed to be going or increasing in the direction the market is going. That's how trends are supported, or at the very least remain steady. But we're still struggling with the 7,800 level. No opening gap for a change. And very quiet. We're supposed to be in trend mode here for the next 2 hours. I'm always a little suspect when Trade Forecaster gives me a very, very long time frame for any one of the modes, whether it be trend, swing, or scalp. Your first in sync eagle signal just printed, this nice little red bar buy off of the hard edge. But I think I might be more inclined to consider the overnight as a bit of a trading range, in which case we would probably hold it on for the breakout and the retest. Anything inside this trading range is going to be a little bit dangerous. So we'll just wait for a little bit. A little bit of a push higher. Kind of a boring start to the day, but that's how it goes sometimes. All right, we're testing the top end now. A little itty bitty break. While I think of it, there's no trading room next week. I'm got to head out of town tomorrow, and I'm not going to be back for a week. So we're going to cancel the trading room next week. Sorry for the inconvenience. Well, I don't know how anxious you are for a trade. You could treat this as a breakout. We do have a couple of bear bars against us. So in theory anyway, this was the breakout. This is the retest. Yeah, I'm thinking that may have drifted too far. All right, well, here now is the bullish retest. Again, we're within the trading range, but you could look to place a order to short. If this bullish retest does not take over at this point, then there's a chance the market will try to head the other way. We're fairly conflicted overall, though. Don't really have any decent signals on any of the tools. I guess we can just stay with this eagle trade for now. All right, well, we're seeing a little bit of a breakdown to the short side. They may well try to test the bottom end of the trading range. Well, they're thinking about it. Wow, it's going to be one of those days, is it? What's going on here? I'm checking the reports calendar to see. Well, nothing going on today. This is very odd. Ron's asking, what are the red and green dots on my hawk? Well, they're the same as for your other tools. They're your warning dots. So each signal develops in two stages. First, when most of the programming parameters are met, and there's a lot more going on than what you see on the surface here. There's quite a few algorithms that are working in the background. So when half of the programming parameters are met, you get a warning dot and an audio alert. This is to alert you to a potential trade. When all the programming parameters are met, you will create a triangle and a hash mark. You can see when the market gets very constipated, you can produce a lot of warning dots when the market is stuck sideways. And the same is true for your falcon and eagle and raptor. Red warning dots would be bearish and green warning dots would be bullish. Ron's asking, and the arrow shows you that the hash mark has been engaged. So we decided to give it a suggested entry point, which is the hash mark. But computers being what they are, you have to give specifics. So the hash mark, excuse me, the hash mark will always print one tick above the high or low of the signal bar. The signal bar is the one with the triangle attached to it. Let's go here because sometimes the eagle signals will overlap. All right, so here we've got a warning dot. So, pardon me, excuse me. All right, so here on the Falcon, a few minutes ago, we had a warning dot telling us that, hey, most of the programming parameters are met. Come take a look at this. Maybe it's a viable trade. When all the programming parameters are met, we get a triangle and a hash mark. And the hash mark will always print one tick above a buy signal and one tick below a sell signal. When the signal is engaged, when the market actually trades past the hash mark, then you create an arrow. Now, you know from actual usage, we don't chase around all these signals. Rather, we try to hold out for our higher probability setups. I'm going to scrunch that a little bit too much. In the Raptor, we've gone as far as labeling them for you to help make it a little bit easier. But even so, you have to always consider the market context. You know, there's that trading expression, you have to look left to be right. You cannot ignore everything that's going on the left side of the chart. If, for instance, in this case, the market is clearly range bound. So even though we're producing some high probability signals, and many of these actually went and hit their profit objectives, this is probably not the ideal time to be taking trades. Rather, we would probably wait for the market to emerge from this sideways trading range, and that would make our trading a little bit more predictable. Now with the Hawk, the Falcon, and the Eagle, they also have their high probability signals that we focus on. But we don't have the signal prompts for those. Okay, well, looks like we may be testing the bottom end. You can see we've produced several signals here. We have a trend change signal in the Falcon, several Hawk signals, and also a number 3 signal in the Raptor. But I think it's probably prudent to take my trade to break even at this point, as we are testing the lows of the morning. And I'm going for the full eagle target, although you can see that we have hit our swing target. We do have a little over $100 on the table at this point. And if we can get another bar lower, I think I will jam my stops in and protect that. There we go. I'm going to squeeze the trade pretty hard now. I'm not going to give it any more room as we're down here to our eagle target, and we hit that. Thank you very much. Okay, now we've had a breakout to the short side, so we're going to look for that breakout and retest. I think this is a huge advantage to having the mean Renko bars. This is not nearly as easy to spot, say, on a time or tick-based chart. Well, how ambitious do you want to be with your trading? We've had a breakout, a retest. You could try to short it again here on a breakdown below the low. We're just producing your basic trend change signal here on the eagle. You know, given the way the market is, I think I am one and done. I don't think I'm going to do another trade. That one was good for a couple $100. Thank you very much. But we'll see here. Part of the problem with this trade is stop placement. Right? We have the same idea. We're in here. And let's say we're only going to look for our 5 ticks. We're not going to make the market work too hard. Oops. All right, so initial stops go where? Well, you know, it's always so tempting to put them there, but the proper place is to put them up here. Now, if you're just looking for your 5 points, you could bring your trade to break even at this stage. if you're looking for your eagle target, which is 10 points. Oh, look at that. Regardless, 5 points or 10 points, they just tagged you at break even. Stinkers. Very, very slow. Well, it looks like they're going to try to move it a little bit lower here on the Raptor. It looks as though we've moved all the way back here to the median line after breaking the primary resistance. Wow. So they did drift low enough to find the eagle target eventually on that follow-up signal. Now we're getting a little bit of a pushback again, which I suppose should not be a surprise given the way the market's moving today. Okay, I guess they're not done heading lower. So the trend does look to be down. Here's a good tip. Ron says, I found that the slowness on my programs was solved by changing my number of days to 3 or 4. Just so you know, some of the tools like the support and resistance suite needs at least 10 days of data. And if you're running the trade forecaster, I believe you need twice that many. But yeah, if you're trying to load 100 days of intraday data, that will definitely slow things down. Mine gets bogged down because I've got so many programs open between the screen sharing software and the charts and the chat windows. Okay, I think it's safe to say the market is rather bearish today. So what I would expect now, pardon me, what I would expect now is a little bit of a bullish rally to come through here somewhere, give us a pullback, and then another trend resumption. Or the buyers will push back and move the market higher. It would be ideal to have another trading range develop so we could look for that breakout, the retest, and then the buy or selling opportunity. Similar to what we did up here. We've moved, you can see, we've moved 2 full zones here on the support and resistance suite. That's a major move. So we've moved all the way. We broke primary resistance, hit the median line. I thought we were going to hold up there. And nope. The market falling hard from the median line all the way down here to the primary support zone. So that's a significant move. It's an emerging pullback. Maybe Trade Forecaster was right after all, and we're going to have 2 hours of trend today. We're kind of bouncing around here a little bit. I was hoping to get another trade in. I'm going to have to close the trading room at the bottom of the hour again. I'm sorry about that, but my life is just too busy. All right, a little bit of a retest. It does open up the possibility of a pullback. Oh, shoot, I was hoping for a bigger pullback. Our trading band very, very broad here. You can see we're up to 75 ticks. Oh, almost pushing 80 ticks in breadth. That does make the market a little bit more susceptible to a reverse. Not that I would get too keen to buy today's market. Don't ignore the trend. You know, you can almost take any old sell signal. Stop placement is going to be a bit of a bear in this kind of situation. But, you know, here we got the warning dot. We're going to produce another sell signal. You could just get on board with that sell signal and probably do okay. But when the trading band, you know, oh wow, we just broke 80 ticks. Okay, let's see if we get a buy signal. And ooh, you know what? I don't think I want to even try it. Not even here in the trading room. The market falling off sharply. All right, there's a little pullback. Let's see if we get a test of the extreme. We'll come back with a number 2 signal to buy. Target would be the hard edge, but I don't think I would be that ambitious, not in this market. Okay, so there's the first buy signal. Okay, now I'm going to look at taking this buy signal that just printed, even though technically it is not a number 2 signal, and I'm going to explain to you why. Usually the way the number 2 signal works out is you see a trend, you see a pullback, you see a test of the extreme, and once you get this last swing, then you have your completed number 2 signal. Okay, now we're going to come back with a number 2 signal, providing this low holds, which it is not. Okay. Occasionally what will happen is your number 2 signal will develop thusly, where you will actually make a new low relative to the last one, and the market will continue higher. It's still the same idea, although according to the textbook, that retest should come up short. That test of the extreme should come up short. But sometimes they don't do that. All right, so it looks like I could have just taken the next with trend signal, and we would have done just fine with that. All right, gang, I'm got to close up shop here this morning. If you're going to hang out and trade some more, you want to stay short. You want to look for any excuse to get short. I think what I would do is, on whatever tool I'm following, I would just shoot a trend line across here and look for a trend line break as an excuse to sell it. Not buy it, but sell it. You see, that's what happened over here. We have this very, very steep trend line. The market broke above, and the sellers beat up on them again. Same thing is likely to happen one more time before the buyers get a little bit more serious. Okay, so it looks like there's going to be another rally attempt, and then you can look for the sellers trying to knock the market back down. Or you can just wait for the sideways trading range to develop. But I do think you want to favor the sellers today over the buyers. All right, be careful out there. I will talk to you tomorrow. See you then.